cash flow versus capital appreciation in real estate. If you have ever thought of investing in real estate, or in fact, if you are thinking of investing in real estate right now as I'm speaking, you need to pay attention to this video. In fact, you need to draw your chair closer and pay detailed attention to this video. As in this video, I'm going to share with you, I'm going to properly dissect, explain the terms investing for cash flow versus investing for capital appreciation as far as real estate is concerned. My name is Alex Iwambe. I'm a real estate broker right here in the city of Abuja. On this channel, we are building a community of smart investors who are intentional about building sustainable wealth for themselves, leveraging real estate as a tool. So that means we don't just educate and inform you about real estate on this channel, but we also identify and share strategic real estate investment options within the fast-growing city of Abuja. So whether you are in diaspora or you are in Nigeria, we make property ownership simple, secure, and profitable for you. So quickly, let us delve into cash flow investing versus capital appreciation investment in real estate. But first of all, let us look at what cash flow investing is. To a layman understanding, cash flow simply means the flow of money into part of a business or your pocket. Now, when it has to do with real estate, it simply means the property you invest into that bring in steady monthly or yearly income. This could be a rental property. Now, an example could be like maybe you plant a mango tree that at the end of the month, this mango produces fruit for you. So you are rest assured that after each month or after each year, you are going to get fruit from these mangoes. Whereas capital appreciation, on the other hand, simply means the value that increases on an investment that you made. Now, let me explain this in real estate. When you invest in land or a property, and typically not for rent, but for you to wait until the value of that property appreciates, then you sell it off and make your money. That simply explains what capital appreciation is. For instance, you bought a land in a developing location for 2 million naira, and 5 years down the line, you happen to sell that land for 10 million naira. Your investment of 2 million has appreciated to 10 million naira, and you are making 8 million naira capital gain on that investment. That simply explains what capital appreciation is. Now, the benefit of investing for capital appreciation is if you want to build long-term wealth, then you should go for capital appreciation investment. And if you are willing or you are interested, and if you know that you can go for delayed gratification, because some people invest and they want their money back as soon as possible. They are not patient. If you are somebody that is patient, then you should be ready to go in for capital appreciation. But if you are not patient, then it is better and advisable that you invest in a project that promises cash flow. In that case, you are having access to money, maybe monthly or yearly, as the case may be. Now, the big question is which of this is better when it has to do with capital appreciation or cash flow investment in real estate? Now, to me, I will always say that it all depends on your investment goal. That is why, as an investor, it is very important that you vet these two terms, the cash flow and capital appreciation. And all your investment decisions should be made in regards to these two terms, whether you want to go for cash flow or you want to go for capital appreciation. Then this will really help you to make a sound investment decision. Because the reason why some investors get disappointed at the end is they don't make their investment good. They don't properly consider these two terms when investing, when going into a real estate investment. They don't understand their investment goal. So maybe someone needs liquidity, fast liquidity in going into an investment, and they tend to, instead of going for cash flow, they now invest in an investment that will bring in capital appreciation, an investment that will bring in capital gain. So maybe at the end of the month, they don't see any value adding up to the investment they have made. So in this case, they tend to be disappointed or probably feel that they have failed in that set of investment. But the big thing is they didn't consider their investment goal. They didn't really plan their investment goal before stepping into that investment. So if you need immediate return, then I advise you go for cash flow. But if you can wait for long term, then go for capital appreciation. The most wealthy people on earth, they have utilized capital appreciation. In fact, they have learned to balance these two. And this is what differentiates smart investors from other investors. The ability to balance the two, invest in properties that promise cash flow and equally invest for properties that can bring in capital appreciation. But capital appreciation mostly is used to build wealth. It's used to build long-term wealth for yourself as an investor. So I hope from this explanation, you can now tell the difference between cash flow investment and capital appreciation investment in real estate. And you can be able to equip yourself with the necessary knowledge on how to draft your goals, your investment goals when next you are stepping into an investment. I remain your real estate broker, Alex Iwambe, right here in the city of Abuja. Finally, if you found this video helpful, don't forget to hit the like button so that the video will go viral and reach to many people as possible. And make sure you subscribe and turn the notification button so that you get notified whenever we drop a new video. Thank you. I'll see you in the next video.